Okay, so I'm pretty sure it's recording now.
Wavelengths on the check.
Yep, I hear you.
Yep. All right.
All right. So we're fine.
Hold on, let me take my gum out.
We're finally here, dude. It only took us like 2 years?
Thanks to you.
Oh my gosh.
If everyone would take a look at this setup and understand look at all this shit.
Yeah. Oh yeah.
We're just started.
Yep. It's a masterpiece in the making.
So, did we ever figure out what was wrong?
No, I don't really know what was wrong. I think that the interface is, I didn't realize how old it is. Like, I don't realize how old I am. All of a sudden I started thinking about it and I'm like, yeah, the interface is probably 7 or 8 years old. So, and I've never even used the right channel, so I had no idea. But
and you have me, and I am zero help, and you're the brains behind this. It's important that everyone knows.
No. That was like
zero help.
That was like a dumb mistake. It was like, I should have just tested the other channel. I didn't, but
Well, today was smokiest day on record for a lot of folks in Salt Lake. Today is August 6th.
Yep. Yeah, it's outside looks surreal. It's like a zombie apocalypse out there.
Yeah, and the reason this is happening is because I was going to go to this beehive festival.
Oh, yeah.
And it literally turned out to be a hive, but in the worst way.
Because no baby.
No.
No baby.
No, they on their schedule, first of all, they didn't tell anybody that they were missing on the day of.
Yeah.
So, Suicide Boys got Delta, and they were trying to get better, couldn't get better, so they canceled. And then the Hive Festival promoters didn't let everyone know until the day of. And so there's still motherfuckers there right now. Wondering what because
who are they who's there? Who are they listening to?
I don't know. This is young kids, and I bought tickets just so I could see, but it's radio hip hop right now.
See, I don't know anything about hip hop. Like, is DaBaby, is he old? Is he new?
He's good.
He's good. Okay.
He's good.
Okay.
He's good. If you went with me, you would probably like his show.
If I go to any concert, I would like it, I'm sure, just to like be out and about. But
yes, but a lot of festivals canceled on him because he made some homophobic comments.
Well, that'll do it.
So, but they didn't tell anyone. So it was him, Suicide Boys, the guy who sings "Can't Make a Wife Out of a Hoe." Dropped out. You've heard that song though.
Maybe I have. I don't know.
Yes, you have.
What is there anything else to it, or is it?
Can't find the words to say I'm sorry, but I'm scared to be alone.
Okay. Yeah.
You got out a piece of me.
Yep.
Bleed eternally.
Yep. Got it.
So what happened was there's kids at the concert, and the promoters just said, like, they had a set list.
Yeah.
And then their set list from 5 to 9 didn't show up. And so they were skipping all these guys, and everyone's like, on the first one, I'm sure the crowd was like, okay, yeah, they skipped one artist. That's kind of weird. Maybe he's coming out after. But then they just kept skipping them. And so there's still people finding out live right now that the headliners aren't coming.
So is there going to be just like a riot or like some kind of... You said the word mutiny.
Well, I told my photographer to go down there and just start taking photos of the carnage because I've seen their Instagram, and there is no wonder they call it a hive. It's a beehive. It is like
the hive.
Bees are everywhere, and they're people. Like it's out of control. I'm sure.
I don't even know where the hive is. Where's the hive?
That's the thing about the hive is it's in the dirt manure field.
Okay.
That's called the fairgrounds.
Okay.
And
so it's in the fairgrounds.
And the kids were having a mosh pit.
Okay.
And the kid said between the mosh pit, he goes, we're catching Delta down here in the pits, because they were like stomping around and having a mosh pit in the dirt.
Yeah.
And
if you're gonna catch it anywhere,
they were
you're gonna
coughing and shit. They were working hard. You know, it's all the things that you're not supposed to do on August 6th when the weather looks like this. And they all walking out of there with Delta. Refunds.
Didn't you send me something? It was like it's the worst air quality in like the entire universe right now. Like worse than China or worse than like Afghanistan or something like that, right?
Well, I've got a video on my way to your house. Normally you can see the beautiful mountains, but you can't. And we'll post that on here. But I've been in worse. In Spokane, Washington, years ago when there was really bad, there was really bad fires. It was like 2017 something. But literally, you could taste the campfire in your mouth. Like, people complain about campfire. This is, not really compared to what I've been in.
Yeah.
It's been ridiculous.
Yeah, it's not
ridiculous.
I don't even know where this fire's at. Is this just the fire from California? Is that all this is? Or from the West Coast?
Yeah.
Because I woke up and walked outside and I thought that, I was like, is there a house in my neighborhood on fire? You know?
I didn't believe it was this bad until, because I've seen worse, until I was driving here to your house. I never really gave it a shot today, but it's up there.
Yeah. Yeah, it'd be an interesting day to have an open house for people from California. You know, anyone coming over here, like escaping California, comes here and they're like, oh, the fires have come here too.
And you know, how, like, should you be wearing a mask?
Well, I mean, if you don't want to get asthma, I guess you should wear a mask today.
Yeah,
on a day like today.
Yeah, open houses. Well, today's Friday. All the high performers canceled. I wonder how many open houses. I mean, because to buy a house, you kind of have to like get emotionally attached to it, right? And it's hard coming here from California, getting off the plane and going, what is this? Where's the mountains?
Yeah.
I mean, if you've never been here.
Yeah, this is basically like if you went to, you know, one of the flat states, right? Like, it'd be like if you went to Texas, like you'd have no idea there were mountains here.
No.
Yeah. Yeah, that is crazy.
And people are here trying to interview for jobs and shit, but they're like, okay, here, come spend the weekend and take a look at the city and everything. And then,
because you see that most often. So like if let's say you have a buyer that comes to you, you see that most often where they're coming in from out of town, they call you or connect with you in whatever way. Do you find that people that are coming in from out of town, like it's mostly their companies that are kind of setting them up for that? Or because I know in lending, there's a lot of cases where we have, you know, companies that are helping people relocate, so they're involved in some way, you know?
It's the same, I imagine. The ones I've experienced, it's like they're coming in and they're not sure if they're going to take the job yet.
Okay. So does the company that's courting them
C-level though?
Okay. Yeah, like upper management.
Yeah.
Okay. Yeah, it's not you're not getting like the lower level those people doing it.
Not the lower level. They make great money, but the worker bees.
Yeah.
They come in and most of them just want to rent because they don't know the area.
Yeah.
I've had one that bought and stayed in an Airbnb, and it turned out to be a great thing for him. It was so much smarter, and I've seen others that have just waited, and then they still didn't get what they want.
Yeah. Yeah, I think there's a lot of people like that, just not getting quite what they want or having trouble in that way. But
you know what? Speaking of getting what they want, so I got a situation. referral. She owns a house in Texas. She's closing on the 1st of this month. She wants to 1031 exchange the property.
Okay.
I probably haven't asked her enough questions yet, but let's see if we can solve it. So she's saying she'll buy it either for a rental, but she doesn't want to pay taxes on it.
Okay.
And I said, so what do you owe on it? And she said like $60,000, and then minus the fees. I don't know how much she's paying, because she asked how, like, do I need proof of funds?
For a 1031 exchange? For a 1031 exchange, your proof of funds is essentially going to be pending home sale. So it's like you're not going to have the funds until the house sells, right? So in lieu of having funds in the bank, we're just going to get like a sample CD. So we get like a sample closing disclosure, and that's enough until we can get through underwriting. And then we have some people where the house sells and we pair it up with the new closing, and then the money's transferred over the same day.
It's never that simple.
I mean, it's
Okay, here.
It's never quite that simple in a lot of cases, but that's what we're trying to do.
Here's the catch. She hasn't worked.
Well, see, that's a different issue.
She's a substitute teacher.
Okay.
I don't know how she's got the house. I don't know her. It was a referral. I picked her up off really Facebook,
Okay.
and the fact that I'm a broker. And she's looking for some 850 in Contwood Heights.
Yeah.
And so she's going to have, I'm sure, 750 if she's got the money that she thinks she's got. I don't know yet. But she doesn't want to pay taxes on her 850. And she just might be confused too. But she lives in LA right now.
Okay. So she's doing a 1031 exchange. She's going to sell a place in California.
That's how I got the referral. She said, you need to be a 1031 exchange expert.
Yeah.
And I said, of course I am.
And for anyone that doesn't know what 1031 exchange is, just listening to us, 1031 exchange is basically where you sell a house,
An investment.
an investment property, and you don't want to pay the taxes on the proceeds that you get from that house. So what do? If you roll in the proceeds, you can roll those proceeds into the next investment and not pay taxes on that money. It's exempt from capital gains. So if you 1031 exchange, it's a great way to protect your money. But you only have so much time, right? So she sells the house in California. She's got, I think it's 2 or 3 months from the time that you sell?
45 days.
Okay.
To identify
So a month and a half.
4 properties.
Right. So you sell the house in California. Then you come to Utah. You play
Texas.
musical houses with
Yes.
with everyone else over here until you can find something.
But how do you
Hopefully.
do that if you're not showing income? She has other money, okay?
Yeah.
Her goal is to not pay taxes, okay?
Okay.
So how do we get this person who doesn't have work history, but she's a substitute teacher, okay?
Okay.
So, like, what type of payments do teachers get?
So yeah, teacher income's interesting because they're they work, let's say, like 9 months out of the year.
Yeah.
Right. So when
Is
we
it a
look,
salary?
yeah, it's usually salary. Like if you look at a teacher's income, it's like they're paid monthly salary, but it's based on 12 months. So it's like they'll get paid every month for 12 months. They're not going to get paid for the 9 months. I've sometimes seen it differently, but that's usually how it is. It's usually they get paid every month, and it's all the way through their contract. So they'll be contracted out for each individual school year.
Okay. So
So
She doesn't
so
work.
so she's a substitute
get-
teacher. Is she doing it 1099? That's the question. Because if she's W-2'd, she could have maybe a contract for like a school district where she'll do different schools, right?
I'm going to guess that she hasn't worked for a minute,
Okay,
and that's why she's selling the house.
gotcha.
So, I mean,
So now if let's say that she
and we're not accountants, by the way. Like, we just know the 1031 because that's fact. It's like,
Yeah.
the moon is a couple hundred miles.
Right. Yeah, it's not.
We
well,
don't need to be accountants to know
we
that.
don't have to. Yeah, we don't have to be like financial advisors to know about that. Like 1031 exchange is that's a. It's an instrument that you use for your taxes, right? If you want to know more about it, definitely talk to your tax professional.
And there's going to be an attorney involved with the 1031 exchange too. But we'll save that for another episode.
Yeah. So in her case, let's say that she's not working or hasn't worked, right? Because if she comes here, well, she's not going to come. She's going to buy a primary residence here, or she's going to buy another investment here, right?
That's what she said on the phone, and that's why I didn't qualify.
Because it has to be another investment.
I know, but in theory, she could say she's buying an investment because she doesn't know. She floats. She's a floater.
Gotcha.
So her goal is just to not pay taxes on it. I don't know what she owns in California. I mean, I've never met a substitute teacher that $850,000 house. I mean,
yeah, I mean that's great if that's the case. I mean,
how old is she?
Yeah.
She'd have to be 75 years old. She didn't see it.
Maybe she's a substitute teacher because she just enjoys it.
Yeah.
Maybe she has a bunch of investments that she made, and so she's making money on her investments. She's like, well, what am I going to do? Maybe I'll go just teach. That could be it. It's hard. You never want to presume. I've seen every
Well, her concern was
everything under the sun.
How are we going to get a letter saying that we can get a loan?
Did you just get a pre-qual letter?
Yeah.
So, well, let's say that she doesn't show income or she's not working right now, right? We can't necessarily do conventional. We can't do agency because conventional loans, FHA, VA, anything like that, it's all based on monthly income. That's like the cornerstone of all of it. Like, what's your monthly income? So if you don't have monthly income or something that's equivalent to that, then you have to do non-agency or non-QM. So there's products that are referred to as like portfolio products where you can use like bank statement only, right? Or you can do even no income. So for investment in particular, if you show no income...
This is so great right now. I'm sorry to interrupt you. This is just
good,
so great.
Good. I'm glad you like it. Because I think a lot of people don't realize this. They're like, well, I have to qualify. I have to qualify with income. You actually don't at all. But if you can qualify with income and qualify with the rental income in that way, you get a better rate, right? Conventional agency, you're going to get better rates. On portfolio products, you have a ton of flexibility, but the rate's going to be higher, right? That's kind of the trade-off. The higher risk, because it's not based on your monthly income anymore, the higher risk will cause you to have a higher rate.
No risk, no reward.
Right. No risk it, no biscuit.
Yeah.
So
send it.
So if you don't have monthly income, then you do the portfolio product. There's products where all you need is basically a credit report and an appraisal with a rent schedule, and that's it. No monthly income required. Those products are referred to as debt service products. So you buy an investment property, you put 20 or 25% down. Same thing as a regular conventional. Like you have to put at least 20, sometimes even more. The particular lender is going to want an appraisal with something called a 1007 or a rent schedule. And that's going to basically be kind of an analysis of what that house is going to rent for. Most of these lenders will want to see that the house will rent for 125%.
So where does that come from?
The rent schedule comes from the appraiser.
Interesting.
Now, this is kind of a black box because I don't know how the appraiser exactly gets the data for the rents.
I know how he does.
You probably do. You probably see that a lot more often. Like in like my wheelhouse, right? I just don't see what he's doing to get that. I'm sure you see it probably from MLS.
It's like covering your eyes and throwing a dart at the.
That's all he's doing. He just draws a bunch of houses on a whiteboard and just throws stuff at it.
I mean, might as well be, because he's not visiting these.
Yeah, no, it's all done at the desk, right? He's not going out there and knocking doors and saying, "Hey, what are you renting this place for?" Oh, $2,000? Okay, great.
No.
No, it's not happening.
He's online though. He's creeping the roommate ads.
That's what he's doing?
Red Bulls.
No, seriously though, is that
Seriously
is that
embarrassing though, and I'm gonna start chewing gum here in a minute if I don't relax.
is that what the appraiser is doing?
No, that's why I asked you, because I mean that's what I assume. I mean, how else? Like when people ask me, what can I get for renting my house? What I do, I look up rentals nearby.
Right.
Okay, and then I look at them, and I look at them, I look at all the pictures, and I see what they're asking, and you get a general idea of what you could expect by what these properties don't have.
Yeah.
But mostly with renting, it's more of a credit issue,
Okay. Yeah.
and so it's like the renter pool is such, and they could have credit issues, so they could afford a lot monthly, but they don't have anything for a deposit.
Yeah. Well, it's the same with buying houses, right?
Yes.
There's plenty of people that, to qualify monthly payment, most people are surprised when I tell them. I'm like, hey, you qualify for this. Like,
I know.
Oh my gosh. I'm like, but you need this down payment. They're like, oh, okay, well, I get it now. I assume it's the same with I mean, you probably see this a lot more often with people that are buying investment properties and talking about like what it's going to rent for and everything. I just kind of see it after. I see it like on the rent schedule for the appraisal, or I just get the lease and I'm like, oh, here's the lease. Okay. 75% of the lease. That's what I'm going to use. Okay. We're good on the lending side.
Yeah, I've never seen a rent schedule.
I think I think to myself, I'm like,
so who calls for those?
well, for the most part, it's underwriting. So
Who are these underwriters?
who are underwriters? I mean, underwriters are usually processors that kind of evolve into that role. It's not necessarily like the next step. It's kind of like a lateral thing to underwriting, but then there's like different tiers of underwriting. There's some underwriters that are like at basic underwriting, and then you kind of go up in different tiers to like the head underwriters.
Do they
and
go
managers.
off their gut?
No. They definitely don't go off their gut. I mean, there's with
Are you sure?
with underwriting, there's a couple things that you balance. I mean, you have to balance the agency guidelines. So Fannie and Freddie create
Yes.
all the guidelines, right? The basic guidelines that we all kind of underwrite to. Okay. There's that. Then you have the investor guidelines, and those are referred to as overlays. So the underwriter's thinking about, okay, I got to satisfy Fannie and Freddie for this, and this reason so that it can be sold to Fannie and Freddie ultimately, right? If it doesn't adhere to those guidelines, then we can't sell it to Fannie and Freddie. And so if there's no buyer, we're stuck holding the bag, and we can't convert that into liquidity to make more loans.
Which is scary if you're investing.
In mortgage-backed securities or in just in homes in general?
Well, I mean, just investing, I guess, because we were talking about this the other day. It's like, if you need to liquidate, are you able to?
Yeah.
And that's why it's important that,
Yeah, even the lender's thinking about liquidity.
yes,
And that's a really good hedge against risk, because you can be riskier if you have a lot of liquidity.
yes, that's what you were saying, yes.
Yeah. So I think a lot of people, we talked about this, where it's like, yeah, if house buying is great, right? But let's say that you tap out all your cash on down payment. Well, let's say you get sick or something happens, or you need the cash.
Get Delta.
You get delta, you get theta, you get gamma, epsilon.
And you're not on salary, you're on hourly.
Yeah, and then it's pretty hard to liquidate a house right away, right? In this
it's
market,
hard.
in this market, it goes fast, but still not instant.
I
right?
mean, the fastest you could probably do it would be 3 or 4 days, probably.
if it's cash, yeah. But I mean, and even still, you take a pretty big penalty on it.
Yeah. No, but it's just not, snap your fingers.
Yeah, you don't snap your fingers. There's cost to sell the house. So it's like if you just recently bought the house and you need that cash, that equity from the house, depending upon what you put down on it, you're going to lose a pretty significant chunk, and it is going to take a little bit. Assuming you get a cash offer,
That's why you put 20% down.
Yeah, that's true.
That's where that comes from.
Yeah,
I already thought of this for you, everybody.
That is the reason. I mean, for lenders, they want 20% down because they know if, rentals are likely to default before primary residence does, and foreclosures, even for the lender, aren't cheap. There's a lot of other costs that go along with it, not just like the loss in the house if it doesn't appraise as high. It's like the attorney fees. It's like the damage to the house if it's vacant and someone's like vandalizing it, things like that. Tax insurance on the house.
HOA.
Yeah, HOA. Then just the realtor fees just to get it done. But yeah, I think in terms of underwriting, just back to your question that you had. Juggling underwriting like that,
Are they men or women?
All kinds, like men, women. That rule's not like predominantly women or anything like that.
It's like polyamory.
It's like polyamory. Yes, yeah. I honestly I get underwriting from from all across the country. Where I'm at now. They've got underwriting in Texas, North Carolina. There's just different people from all over the place.
So it's not like they're out to get you.
No.
Okay.
No. I think most underwriters, they're like, they're trying to do as good of a job as they can with, the demand that they have on themselves for like the volume that comes in. So I think in a lot of cases, these are people that have a ton on their plate. They're trying to get all these loans done. They've got imagine you're doing maybe like 3 loans a day as an underwriter. So you're doing 3 loans a day, the whole review, signing off all the documents. And let's say of those 3 loans each day, you've got one bad one. And that one bad one just lingers around forever. Well, after a week, now you've got seven bad ones where you're trying to figure out what you're going to do with these deals. And the loan officer's calling you, putting pressure on you. I can only imagine how stressful that could be.
It's because you care. You have a heart.
I do have a heart. No, I do. I think operations people in particular, they do a ton, and a lot of times it's thankless. It's like the loan gets done.
But but life is such.
Yeah, no, for sure. Even being a loan officer, it's like the hardest deals where you spend the most amount of time. Those are the deals where it's like,
Yeah, of course.
You just it's like we got it done. Like, oh my gosh, like what it took to get there, and it's just like it's over, and then that's it. On to the next one.
Well, we're like tour guides.
Yeah.
You don't need to go see the tour 3 or 4 times. Right. I mean, how many times do you need to go see the tour?
No, I actually like that a lot. I think that's exactly what we are. We are tour guides.
We're the tour guides. We take you through, or tell you what the other tour guides won't.
Oh my gosh, what was that?
I don't know.
Did it stop recording?
I couldn't tell you. Should we pause?
Sure. Take a break.
Well, we can keep going, but how do we know if it stops recording?
So you see in the top, in the middle, how it has that red circle up there?
Yeah. Okay, that's still going.
So that is like the global. So if you press the square stop button, it will stop recording. So it's still going.
All right. Sorry, everybody.
Yeah.
Let's talk about why the VA makes it so hard for veterans to buy houses.
In what way do you think?
Well, the market is competitive as such. A lot of veterans want to buy new construction homes, and with the market being so volatile, they have to sign contracts that say this house might not appraise and you have to come up with the difference.
Yeah.
And because you can't.
The VA escape clause.
Yeah.
Yeah.
So, but I actually, I think that VA is probably just as competitive as conventional, but it has a stigma, you know?
Yeah.
And like, do they need to have that clause in there?
I mean, I think like the market we're in right now is so strange because usually that's a great thing for veterans to have that escape clause. And what the escape clause is basically if the house doesn't appraise, right? Or if the loan declines for certain reasons, the veteran can escape the contract without having to pay the earnest money. That's what the escape clause is. And FHA has the amendatory clause, which is similar, right? That one's more focused on the appraisal. The appraisal comes in low, then they can get out of it.
The FHA appraisal stays with the property.
Yeah,
VA stays with the purchaser.
with the veteran.
Yep.
Yep.
And the thing about that is, and why that's important is because FHA and VA are really different. I mean, I'm sure that like you can tell the differences. And why it's hard for the veterans is because they have that clause in there. But most of them have more money than they need. And so they can actually make up the difference. But yet, an FHA, who I don't know if they do or not, but I'm really talking about more expensive homes, you know, probably over the FHA limit. Is the FHA limit the same as the VA?
No, it's a little bit different. Like I mean, they kind of follow the conforming guidelines, the conforming limits for conventional. So, like, by default, for example, VA is, what is it, 548, 200, I think is what it is now. That's like where it becomes either high balance or jumbo. In some places, it's considered high balance, which is like, it's not quite jumbo. It's like this middle, gray area between the two. VA tends to follow that. There's actually not a whole lot of places that you can go higher than the conforming limit on VA. And then FHA actually is quite a bit different. Like FHA can be like really specific numbers in certain areas, different than VA. I think just with your question about like why it's harder for VA, the funny thing is that it's actually easier to qualify for a VA loan, like way easier to qualify for a VA loan than a conventional loan. Like conventional is way more difficult to qualify than VA. And
well, yeah, because they haven't served the country.
Well, for sure,
so
like
they were doing.
I've got a soft spot for
the
veterans
most
for sure.
Difficult.
Yeah, I got a soft spot for veterans for sure. But even beyond just like not having anything to do with them, even it's like. Sorry,
I didn't mean to take it there.
No, it's okay. It's okay.
It went dark.
No, you're good. I think. Yeah, they're the only thing about the VA loan that can be a pain in the butt is the requirements on the appraisal. So like conventional loans, you can have. I mean, the house can be pretty dinged up, right? You can have stuff missing, and you can as long as there's no safety issues, you can get a conventional loan done on a house, right? On VA though, it's like if you have a missing cabinet, boom, you're going to get hit for that on the appraisal. You have to have that completed before closing. So on a new construction, you'd think that it wouldn't be a problem because on new construction, the house is perfect, right? You get the certificate of occupancy, it's perfect.
No, it's not.
Well, I mean, as far as like a house from like 1980 or 1970 that has been remodeled versus a new home, like it's definitely going to pass, right? But I think you're right in talking about the escape clause. Like that's an issue. Because the seller is like, hey, you're going to have to pay over listing, and that's a conflict.
I hear guys on Facebook that have data. They say, we've got data showing that a VA beats conventional as far as contract to close by 4%. A VA is more secure.
I don't doubt that at all.
What do you say?
I don't doubt it at all. Yeah. I think a VA loan, it's like, if I have a borrower that's,
So why won't
a
these
600
builders
to 620
take VA?
I think it's just the paradigm, the zeitgeist.
I
They look at VA and FHA, and for whatever reason in their head, they're thinking, "Oh, that's not a good borrower, or that's not a good loan." When it really is, it's actually,
They hate veterans.
well,
They don't care about them.
I don't think they. I definitely don't think
Whatever
they go out of
happened
their
to
way.
military discount? I mean,
For loans.
yeah, like
just in
like,
general?
No, if a veteran came up to me and asked me for a 10% military, I'll give it to you guys.
Yeah,
Like I might even give you more.
yeah. No, yeah.
But whatever happened to that? Like, how come the builders don't have that?
That's a good question. I mean,
I'm-
I think
I mean,
the builders
okay,
don't
we-
care about anybody right now. Because
No, but
basically they could erect a teepee and sell it for $500,000.
I'm not talking about stolen valor here. I'm talking about the real guys.
Sure.
10% is the least everybody can do.
Yeah, no, I agree.
Very least. So come here for your 10%.
Yeah, no, I totally agree. I think there's some companies that still do stuff for veterans. I think that unfortunately veterans don't get the same amount of praise they did.
Nobody does though.
It was like, I think there was a time when veterans really got the short end of the stick, and then there was like the early 2000s, right, where it was like everyone was patriotic again, and for whatever reason now it's just different. Even with like the Olympics and everything, it just seems a little bit different. Like patriotic ideas and things like that don't seem like they're in vogue, right?
Yeah.
And that's unfortunate, and it's unfortunate that it hurts veterans. But I think there's like for example, USAA. There's a company that's still veteran focused.
Yeah. And they're the best.
Yeah, USAA does really good for veterans. When I see policies come over, the only thing I could say about USAA is I wish they just had agents. Then they don't, and that is a pain in the ass because we have to use their online portal, and there's no one to talk to. They give a great deal to the veteran, like they,
Tech in real estate.
ugh, yeah. It's like, it's something that's inevitable, but it sucks because it's not perfect.
It's not perfect. Does it work? We don't know.
If you ask me,
Depends
like,
on if Guitar Center is close.
oh yeah, well, you go to Guitar Center and they don't help you there either.
I know.
I walked in, I'm like, hey, can someone like test this? And they just went like this.
They probably said, do you have a receipt?
They're like, do you want to look at some other ones?
No, I didn't buy this here.
Yeah.
Can you test it? And then one of them was like, yeah, I can test it. Starts knocking on it, hammering it. It's like, this is a hammer.
Yeah. I think for sure if the human element,
You were a lay down in there. You walked into Guitar Center.
I was just trying to get in and get out.
Basically, they stuck you up. They said, give us all your money and we'll let you have a podcast.
I mean, it wasn't even like that. It was
You know
just
how
like
much this podcast costs everybody? Thousands. Thousands.
it wasn't cheap.
Neither is the knowledge. How do you hook all this shit up?
Dude, I don't even know how to hook up most of this stuff. Honestly, like I on the cameras I'm like, "Oh, where's the red button? That must be record."
It's usually how
And
you do it. I mean,
it's
this is
working.
This is a long time coming.
Yeah. Oh yeah. No, it's awesome. I feel like, the more and more we do these, the more and more we'll get used to putting out really good content, really good knowledge. There's gonna be hidden gems in all of this.
Yes.
Where it's like, I think as we get talking, it's like all of it just kind of bubbles to the surface. All this like stuff that people should know when they're going to buy a house. When they're going to get loans, and there's plenty of things like what you talked about where it's like VA loans are bad, FHA loans are bad, right? Which is that is total horseshit. It really is. It's
Who are
not
underwriters.
It's not the case.
Yeah.
It's like I think there's a lot of realtors that feel that way, or maybe a lot of builders that feel that way. But those loans perform, they close, or else we wouldn't be doing them if they didn't, right?
No, it's the best program.
Especially the VA loan, like
It's zero down.
yeah, and there's one thing. So the veteran discount you talked about. So for veterans that have excellent service that have a disability where they're receiving a VA benefit, they get like a huge portion of the VA the fees that you pay for the VA loan, the VA funding fee, that gets wiped away completely. And VA loans tend to have much lower interest rate and better pricing. The only thing about them were depending upon your credit and depending upon your down payment, where conventional can be competitive, is that VA does have a funding fee that you pay. But for disabled veterans, they don't pay that. So it's like if you're doing a primary residence and you do a VA loan versus a conventional loan and you're a disabled veteran, for sure the VA loan almost always is the better choice for that reason.
It's because they don't need as much money.
Yeah. Well, they don't need
Because they're
any down payment, right?
no down,
Yeah.
barely paying taxes. If you're disabled, you get an extra benefit, and all these things are at minimum what should happen.
Yeah. Yeah, they
But
definitely
they're stronger borrowers.
they definitely got it right with the VA loan. The VA loan is set up in such a way to where it's way better than conventional as far as rate and pricing. It's just that funding fee. But that's the thing, like there's got to be a way to fund these programs, and the way the VA funds their programs is with that funding fee. That provides them with the ability to guarantee these loans for other veterans and create their liquidity, right? And then if you're a disabled veteran, then you don't have to pay it.
Who do they foreclose?
Yeah. They do, because
What happens to those houses?
so every
Have you ever seen that?
I honestly
hard-
don't
it's hard to tell.
I honestly don't see the foreclosures. You know what I mean? Like
You don't go to the courthouse and check the.
no. That's like there's people within each mortgage company that does stuff like that, right?
You're not sending out the mail.
I'm not sending out the mail.
You're not okay.
But
You're just wishing him happy birthday.
I wish him happy birthday for sure. No, I mean, I've definitely have had borrowers that have called me and like, hey, I can't make my payment.
Oh, what's that like?
I mean, you just try to give them as good of advice as you can, if
You tell him to sell some stuff?
I mean, I tell them to do whatever you can to make the payment.
Yeah,
Do whatever you can to make the payment.
Oof.
Because
it's hard.
mortgage rates are really painful on credit.
Like how painful?
Significant, very significant.
How many points we talking here?
A mortgage late,
How many points?
it's hard for me to say exactly, but
Take a guess. I mean,
30,
they're not
50,
going to fact check us. No one's listening.
30 points, 50 points.
Oh, I think it's probably. I bet it's closer to 65.
Maybe. Yeah.
They slap you for
Because
disrespect.
the other thing is like,
They said you agreed to this, and now you don't pay.
wham.
Boom,
Yeah, you get the credit.
and then you start crying.
The credit backhand. The Experian karate chop.
It's nothing like going to buy something on credit after you missed a payment.
Oh man. Yeah, I the other thing too is like if you're, borrowers that are going into foreclosure, the last thing you want to do is talk to the lender, like talk to the servicer. That's like the number one thing you should do. Is have communication.
What do you got to lose?
Have communication with whoever holds the loan, because for the most part they're going to want to work with you, because a foreclosure, again, it is very expensive for the lender. It's not what they want to do in most cases, But yeah, that's a tough. I mean, that's a super tough conversation because like you a lot of times it's just they can't make the payment and there's nothing else they can do.
Well,
I mean, the good thing is right now it's like with home values increasing, it's like they could probably sell. You know, if they bought a house a year ago, they could sell the house and be fine, right? But there are times in the past where it's like you had a short.
depends on their agent.
Right?
Yeah, I mean, the highest I've seen in 1 year was this year, $180,000. $180,000 in a year.
On
Garbett Homes.
is that the like the average?
Off Winchester? No. It all depends on the house.
But that's what you've seen on one particular house.
Yeah.
That you help.
Yeah, that was the most I've ever. But I hesitate with that too because I've seen some flips. But to clear that, I mean, it's like a big deal.
Yeah.
I mean, you just don't. It's very rare. Very rare. But this is what I would tell them if they called me. I would say, you better call whoever you need to, whoever you get your statements from, and let them know and work it out right now because you've got nothing to lose. Because if you don't, then you're still right where you are right now.
Yeah. Yeah, no, and that's the thing. Like the train's gonna leave the station whether you
So who takes the house on
are
VA
talking to them or not.
veteran? Who takes that house?
Well, see that's the thing is that the VA really has nothing to do with the actual lending of the money.
Because it's insured.
Well, the VA guarantees the loan. So the difference between FHA and VA is that FHA has an insurance, right? They have their own mortgage insurance. The VA has a guarantee, and they're guaranteeing a certain portion of the loan amount for the lender, so that if the veteran defaults, they basically pay a claim to the lender to help them with the default. So every loan that's done is bought by some investor. So it could be like Credit Suisse, right? Credit Suisse is a big buyer of loans. But I mean, anyone, like you'll get bought by like PennyMac or
Hedge funds.
there's a million companies that will buy the loans, and they could also be backed by hedge funds. And so
Shell companies.
maybe. I mean, I think there's plenty of servicers that are like that, where they have a lending side and then a servicing side, But if you foreclose on a VA loan, that's being held by some bank. It's not being held by a VA. So if you foreclose on a house, that investor takes the hit. They get paid a claim from VA, right? They get paid because it's guaranteed, but the investor that holds the loan is still on the hook for it.
It's got to make sense though. Like the claim is good enough.
It's like the top 25% is what the guarantee is based on of the loan, and so, I'm sure there's some at the very top when they're if you were to receive that payment from the VA for a defaulted loan. I've never seen that exactly. Can't really speak to that exactly, but that's what the guarantee is there for, is to pay for the default or help the lender in the default. And that's why they can do a VA loan for so much better on interest rate and pricing, because VA is subsidizing the risk with that guarantee.
Better than private mortgage insurance.
See, that's hard for me to say, because again, I haven't seen exactly what that looks like. Like, I haven't seen when the claim comes in, like, what's it for exactly. But I think my assumption is that the VA guarantee pays better than private mortgage insurance, because the rate and pricing is a lot better on VA. But there's a lot of differences as to why that's the case, and it has to do with investors buying on the secondary market, what these loans are worth, and how they perform. Like there's a whole entire market for mortgage-backed securities that people that do loans, people that get loans, get mortgages, they have no idea about, And like that's what rates are based on, is like how much a package of mortgage-backed securities can be bought and sold for. It all comes down to a market, almost like trading stocks.
Yeah, that'd be interesting. Who defaults more?
I've actually looked at some of the data, and it's surprising how often loans perform. Even loans on borrowers that have not that great a credit, those perform still really, really well. Are they going to perform worse, of course, than the higher credit borrowers? Yeah, but they still perform really well.
Yeah. It's not like every day your neighbor's losing his house.
Yeah.
I mean, that's like usually like one or two in a neighborhood, maybe.
I feel like the people that are pulling the levers, I mean, they have it down pretty good. Like,
who are they?
The like secondary departments of these lending companies and capital markets. They look at, okay, what kind of credit do we want to take? Where will these loans perform and where won't they? And there's certain, below a certain line,
you have to have an MBA.
Guidelines get kind of crazy, and there's a reason for that, because they look at the credit and they say, okay, well, below 620, 600, stuff kind of goes off. The loans tend to not perform as well, right?
That's why the guidelines exist. There's some sort of formula, and that's why it exists.
Yeah. Yeah, it'd be really cool to see deeper into what those capital market guys are doing, because as a loan officer, you don't really see that whole part of it, right? Like you are focused on helping people complete their loans, helping people buy houses, helping people refinance. You just aren't looking at that other side, like what happens to the loan when it goes. Like I know what happens, but I'm not like in the trenches doing that. So it'd be interesting to see, how they, that other side of it, where they're trying to, make deals with these investors to buy these loans, which loans they sell directly to Fannie Mae and Freddie Mac, which ones they're trying to sell to these other investors. And what they're doing is they're trying to make more money on the loan, and that's how they do it. So it'd be interesting to see that at some point. But, I'm so busy doing loans, it's like the last thing on my mind, usually.
Yeah, it's definitely above my pay grade. I mean, I wonder what the top tier of being a real estate agent is. Is it commercial? Is it doing the big commercial deals? Are those the biggest dogs, biggest fish?
Like a meat packing facility or something, or like some
Trump, Trump Towers.
Trump Tower.
Like the guy who got that money.
Yeah.
Like whoever got the money from the big commercial property. The big land deals.
Yeah. Yeah, like is it top of your game is most amount of volume, or is top of your game like you're the guy that's doing like
most amount of money
buildings?
Like volume doesn't matter. Not to me, at least. The best is the guy who makes the most money, probably.
Yeah.
And how he makes it, I don't know if that's what makes the best, but you understand what I'm saying, is the guy who's trusted with that much money is probably earned that, or there's probably a reason. But if you're just a bouncer watching him come in,
yeah,
you're working hard. But so was the club owner, who's just sitting there in his office doing nothing. I mean, he had to teach the bouncer how to clock him in.
Do you think though that with being a realtor, a lot of it has to do with just who you know? Do you feel like it's I mean, of course, you're a really good realtor, right? Like, I love you.
Thank you.
But, is it are the guys at the very top that are doing the most? Are they just the guys that have the best marketing, the best they just know the right people that have those houses and have those places they're trying to sell?
More often than not, it's a legacy thing, and so their parents or someone in their family's probably done it before, and they're established.
So they take. So you're saying like a lot of realtors maybe take on the book of business from like their parents,
Something like that.
or like something in the family.
Just
like
their
that.
network. It's
Yeah.
just it's the people that they're around, and that's not for everybody.
Yeah.
But I would say the majority of the bigger dogs. I mean, but at the same time, you can get visited by 30 of them, and then on the 30th one, you're like, all right, I like this guy.
Yeah.
And are you just worn down, or is he really that good on the 30th?
Yeah. Well, there's something to be said for you're just the right guy at the right time.
That's everything.
I mean, I feel like that's me all the time. I happen to call them at the right time, or they happen to call me, and it's like, oh, okay, let's do it.
God, break me off some of that. I'm the wrong time. Bad time? I catch you at a bad time? You having a bad day?
You just hear the forklift in the background, or you hear like beep. Yeah.
No, I'm at the gym. I gotta finish chest. I'm gonna call you back.
The dog's barking. Yeah.
The mailman.